This is Nightly Business Report with Tyler Matheson and Susie Guerin. Brought to you by
TheStreet.com. Interactive financial multimedia tools for an ever-changing financial world. Our Dividend Stock Advisor guides and helps generate income during a period of low interest rates. Real Money helps you think through ideas for investing and trading stocks. Action Alerts Plus is a charitable trust portfolio that provides trade-by-trade strategies. Online, mobile, social media. We are TheStreet.com.
Dollar dilemma. The greenback is getting stronger. Who benefits? Who gets hurt? And what does it mean for your wallet?
Shareholder pressure. Executives are coming under fire for holding the titles of both chairman and CEO. But do investors really benefit if the roles are split?
And the Great Gatsby gamble. Will Hollywood's big bet on this literary classic pay off? We have all that and more tonight on Nightly Business Report for Friday, May 10th. Good evening, everyone. So, Tyler, this incredible winning streak on Wall Street just continues.
Another week of records and more records again today. That wraps up 3 weeks in a row of gains on Wall Street as that final hour push helped the Dow and the S&P 500 close out the day at fresh all-time closing highs yet again, with stocks getting help from some solid earnings reports just ahead of a G7 finance ministers meeting in the UK this weekend. After an up and down session, the Dow ended nearly 36 points higher. It was a last hour run to the finish line. The record close there, 15,118. Technology stocks fueled a 27-point rise in the NASDAQ, and the S&P was up by 7.
The big talk on Wall Street and all across corporate America today, the mighty American dollar. The U.S. dollar has been getting stronger against other currencies, especially the Japanese yen. And that's because Japan's central bank announced an aggressive plan to stimulate its economy with a flood of money. And it's working. Just yesterday, the U.S. dollar traded above 100 yen for the first time in 4.5 years. And today, it went even higher. So who wins and who loses when the dollar gets stronger? And what does all this mean to you? Courtney Reagan explains.
For American consumers, a stronger dollar means the prices of goods from foreign countries, like electronics, computers, and cars, may be lower if current trends continue. This week, the dollar got more expensive in Japan, topping 100 yen for the first time in 4.5 years. One of the triggers? The central banks in Japan and elsewhere are following the Federal Reserve's lead. They're spending more money. When the supply of any currency begins to grow, as it is in Japan, the price comes down. When the price drops, you can buy more with the U.S. dollar. That's why the dollar index, measuring the value of the dollar, has been climbing since early February, up about 4.5%. A stronger dollar means Americans traveling overseas this summer will have more buying power than they have in recent years. But that's a double-edged sword because foreign tourists will find it costs more to visit the United States, which means their purchasing power is lower, and they won't be able to buy as much as they could have before. The same is true on a big scale for U.S. exports. Goods like cars, heavy construction equipment, and servers and computing storage are becoming more expensive around the world. U.S. multinationals like Ford, Caterpillar, and Cisco have billions of dollars in revenues at stake, particularly in Europe. Already this year, Ford, GM, Caterpillar, and General Electric have all announced plant closings and layoffs in Europe. Smaller European revenues will affect profits, which means forward-looking investors need to consider the effect of a stronger dollar on stock prices. For Nightly Business Report, I'm Courtney Reagan.
Paul Christopher joins us now with more analysis. He's Chief International Strategist at Wells Fargo Advisors. Mr. Christopher, welcome. Is this a case of the dollar actually getting stronger or of other currencies like the yen and the euro getting weaker?
Well, it's definitely a case of the yen getting weaker against the dollar. But if you go back to the beginning of the year, the euro is about flat against the dollar, and other currencies like the Canadian dollar, the Swiss franc, are also about flat. This is really a yen depreciation story.
Paul, which is more important for consumers and investors? You heard in our package that the prices of cars like Toyotas or Sonys are going to come down. And then on the other side, that the profits of big corporations will be affected by this. So which is more important for consumers and investors, these two trends?
Well, that's right. Whenever you have an exchange rate change, it's basically a price change, and some people will be better off, or the same people could be better off in one sense, and the same people could be worse off in another sense. So how do we balance these two, the consumer effect versus the investment effect? I would say there's a third factor that's more important than either of those two, and that is that as the yen depreciates, you're going to see more and more Japanese investors, as well as investors from other parts of Asia, coming to the U.S. financial markets to buy stocks and bonds. That's not only going to boost the value of the dollar, it's going to boost the value of U.S. financial assets, and that's ultimately where I think U.S. investors, U.S. residents, will gain the most.
So if I am a U.S. stockholder and my portfolio is mostly U.S. stocks, you see this on balance then as being a positive for me?
Yes, for right now, it's certainly a positive, especially when you consider that those companies are also selling here in the United States, and those sales are going to get stronger as the U.S. economy continues to strengthen. So it's not just a question of what happens to the earnings overseas.
I know this is a little sophisticated for individual investors, individuals taking advantage in currency markets of all of these changes that are going on. Is there any way for the individual to do that, or is it just too risky?
Well, there are ways for investors to take positions in foreign currencies, but frankly, we think it's very risky, especially for a long-term investor who has long-term goals in mind. That person should be considering that foreign exchange markets tend to overshoot. That means the prices can move wildly in one direction, either up or down, before they finally correct. That could give your portfolio quite a wild ride. We would be more inclined to stay with more conventional stocks and bonds, both here in the U.S. and overseas.
Paul, an awful lot of the moves in the currencies have been driven by the central banks. The Fed here, the Bank of Japan in Tokyo, and of course the European Central Bank. What happens when those three, or one or more of those three, back away from what have been sort of unconventional monetary policy, flooding the system with cash? What happens then?
Well, that's a key question. And investors need to remember that once let's say the Fed, if the Fed decides to step away from these unconventional policies, it's going to be for a reason. And that reason, according to what the Fed itself has said, will be that the U.S. economy will be strong enough to stand on its own and generate good growth on its own. So I think what we can look forward to is once those economies get to that point of being able to manage on their own sustainable growth, then you'll see quantitative easing and other programs like that from the central banks sort of fall away like crutches when a person doesn't need them anymore.
Paul Christopher, thank you very much for your help tonight. Paul Christopher is Chief International Strategist at Wells Fargo Advisors.
Bad news for corn traders could be good news for consumers. The Department of Agriculture is now forecasting a record crop of corn this year, along with grain and soybeans, as farmers bounce back from the worst drought in decades. Corn futures fell 2% today. Wheat prices fell nearly 3%.
Activist billionaire investor Carl Icahn is raising the stakes in his bid to take over Dell Computer. Along with partner Southeastern Asset Management, Icahn is launching a fresh challenge to Michael Dell's plan to take the company he founded private for more than $24 billion. Icahn's plan would pay shareholders only $12 a share. That's far less than the Michael Dell plan, but will allow them to keep some equity stakes in the PC maker. And Icahn didn't mince words when talking about which offer he thinks is a better deal for shareholders.
You could look at it and almost instinctively you know it's good. And I'll tell you, this one's a real good one. You could look at it real simplistically and not have to do a hell of a lot of work to know that the shareholders, in this case, are literally getting screwed.
Shares of Dell finished the day higher. They closed at $13.45.
Despite a solid overall earnings season so far, some activist investors and shareholders are still not happy, and some are looking for changes in the highest ranks of corporate America. Specifically, they want to split the tradition of a CEO also being the company's chairman. Mary Thompson explains.
The very top of the corporate ladder, a shaky place this proxy season. Investors tired of bad headlines and poor performance, pushing for change at the highest rungs. The latest firm to respond, the energy giant Hess. It's nominating the former head of GE Energy, John Kranicki, to be its non-executive chairman. Some shareholders may want all firms to split the roles of CEO and chairman, but attorney Amy Goodman says it's better done on a case-by-case basis.
That will vary from company to company, and it will vary from the situation that a company is in at a particular point in time.
In Hess's case, serial restructurings and years of underperformance under current chair and CEO John Hess, prompting activist investor Elliott Management to mount a proxy fight. Elliott wants 5 new directors on the board, not just a new chairman. This follows the chairman's departure at Hewlett-Packard, where a series of missteps prompted 41% of shareholders to withhold votes to re-elect Ray Lane. He later stepped down. At Occidental Petroleum, the blow more stunning, 70% withholding votes for longtime chair Ray Irani, frustrated by a fight over his successor and years of high pay. Later this month, investors vote on whether J.P. Morgan chairman and CEO Jamie Dimon keeps both jobs. Tarnished by a $6 billion trading loss, Dimon's bank still posted record profits. He's garnered support from peers like IAC's Barry Diller.
I think he is as first-rate as it gets.
Proponents say splitting the roles of chairman and CEO is good governance, but it seems many investors just want that change because of poor performance. For Nightly Business Report, I'm Mary Thompson.
Our next guest says splitting the dual role isn't always in the best interest of a company. She's Karin Brenner, clinical professor at New York University's Stern School of Business. Karin, thanks for joining us. You know, most investors think that when you split these two roles, that it's going to reduce conflict of interest, it's going to have more of an independent board. You say not necessarily the case. Why?
Not necessarily. Every director gets one vote. So at the end of the day, splitting the roles doesn't change that dynamic. And sometimes it's appropriate to split the roles if there's a transition in the CEO role, or if the company is going through a certain event in its life, a transaction or new leadership. There are specific instances where splitting the role can be very effective and helpful in arranging or facilitating a transition. But really, it is not one size fits all. I think one of the good elements of our governance system is that we allow for different cases and different contexts to respond to the needs of the particular situation. And in the case of J.P. Morgan, the company has performed in a stellar fashion. It's navigated the vicissitudes of the financial crisis exceedingly well. And while it did have this very unfortunate trading event last year, I mean, a disastrous trading event, the key when a company goes through a crisis is how it responds and how its leadership responds. And I think it's generally gotten very good marks on taking the heat and dealing with the issue internally and externally as a result of that event as well.
Let me take the question, Karin, and maybe turn it inside out a little bit. It may not, splitting the roles may not actually cure the ills that the defenders of that plan would suggest. But is splitting the roles of chairman and CEO, is it ever really harmful?
Well, I think
what's wrong with it? Why isn't it? Why not just do it?
If a company is starting from a zero position and there is not somebody who's sitting in a position already as a chair and CEO, then it's very possible that having two separate individuals hold those positions could make sense. But companies usually have a historical context. People come into these roles with a certain position and they've performed well in these roles. And so the idea to have a change for change's sake is not necessarily fair to the individual involved, and it certainly doesn't necessarily help the dynamic on the board level.
You know, we've seen so many changes out of Washington after the financial crisis that were supposed to help to make the board stronger, have better scrutiny, and yet still from individual investors you hear a lot, oh, these boards, they're so clubby, there's not enough independent thinking. What is your assessment?
Well, I think there are 2 points. The latest regulations have been helpful, especially in the area of executive sessions. And that's when the CEO and if the CEO is also chair, leaves the room and the board can have a session, only the board itself without management present. And sometimes if you have a very domineering CEO, that can change the nature of the discussion, and that's facilitated also open dialogue. I think it's always a challenge when you have a group dynamic to maintain independent and diversity of thought. And that's really a challenge, whether you have someone assuming both roles or there's a split role. The key is to have a healthy, respectful engagement with independent thinking as part of that dynamic in a boardroom. And joining the role or splitting the role doesn't necessarily facilitate or inhibit that.
All right, very controversial issue for many people here. Karin, thanks so much for coming on the program. Karin Brenner of New York University Stern School of Business.
Thank you.
And still ahead, 4 high-quality stocks that could perform well over the next year. Tonight's Market Monitor will tell you what they are and why they're buys. But first, a look at how the international markets closed today. Sears Holdings, a big winner today. It gets us started in tonight's Market Focus. The company rolling out a lease-to-own program in its stores for customers with credit problems. They'll be able to lease large appliances, lawnmowers, other products, and eventually own them by making monthly payments. Investors see positives for Sears Holdings and push the shares higher all day. The company closed at $56.85, up more than 7%.
Nissan is getting some help from the weak Japanese yen that we discussed a little earlier in the program. The automaker said today earnings surged 46% as it converts overseas profits into yen at a more favorable rate. Nissan CEO Carlos Ghosn expects more benefits from that currency difference. Shares of Nissan are lightly traded here in the U.S., but looking over at the Tokyo stock market, they were up every day this week for a gain of more than 8.5%. Shares of generic drug maker Actavis soared today as the company confirmed its merger talks with specialty pharma company Warren Chilcott. The deal is still in the works, but shares of both companies were up by double digits. Actavis by more than 12%, Warner Chilcott at 19%.
Universal Display slumped after releasing first quarter results, roughly in line with expectations, but investors sold off, concerned about future profitability. The company makes elements for LED video screens. Samsung is its key customer. Universal Display shares lost more than 17.5%, and they finished the day at $27.50.
Our Market Monitor guest tonight says there are 4 good reasons that stocks will keep going up. He's James Awad, chairman of Plimsoll Mark Capital. So, Jim, we're waiting for your top 4.
Okay. Well, the reasons that the market's going up, all of them remain in place, which are that the Fed is supplying this enormous liquidity, which is supportive of both the economy and the financial markets. Second, you have growing corporate profits. Third, you have sensible valuations on equities based on long-term valuations. And finally, in the type of environment that we're in, there is no powerful investment alternatives to stocks. Bonds provide low yields. Money markets provide almost nothing. Gold doesn't compete. Commodities are going down. And so you might as well own a share of growing profits with good dividends to get a total return in this type of environment. All those conditions remain in place.
Do you believe we're in the middle of a secular bull market, a long-term secular bull market, or in the early innings of one?
Well, we have been in one for some time, and the answer to that question, Tyler, depends on the news going forward. The risks that we have to watch are that there is tremendous speculation that has crept into the U.S. credit markets because of the Fed's easy money policy there, chasing people to take risks that may or may not end up being prudent. And I worry about junk bond yields. I worry about covenant-light loans. The same thing is going on in Europe, and they don't have growth, and we do. And also the geopolitical situation around the world, particularly in the Middle East, poses risk. And finally, while stocks are fairly valued, they're not as cheap as they were. So what I would say is that if none of the triggers are pulled, a credit event in the United States or Europe or a war, we will end up with stocks ultimately being overvalued, and that will be the end of the bull market. But that would give this market some more time to be labeled a true bull market.
All right, Jim, let's run through some of your stock picks that you think will do well in this environment. And at the top of your list is Johnson & Johnson. It's had a nice run so far this year. It's at $85 today. How much higher do you think it can go? Why do you like it?
Okay, so the theme here is you want to stay in because the situation for equities remains good, but there are risks, and you want to minimize your exposure to those risks. So a stock like Johnson & Johnson, which is world-class in terms of its balance sheet, in terms of its market share, in terms of its dominance in the markets that it participates in part of the need of its customers to buy its products, and yet it sells at only 15 times earnings and has a 3% dividend. So if the market itself goes from 15 times to 20 times, which could happen. That would be the point at which stocks are overvalued. This could go to 20 times, and you could have a $110 stock. And at the same time, you do have protection in case things get a little rough. Let's take your next two stocks, Microsoft and Intel, that used to be joined at the hip in a good way. For much of the past decade and a half, they've kind of been joined at the hip in a bad way. Why do you like them now? Well, that's what gives you the opportunity, that both of them have missed the movement from the PC to the handheld, and they're both aggressively trying to remedy that. And they do have the market share and the balance sheets to remedy it. And in the case of Microsoft, you're selling at basically 10, 11 times earnings. And in the case of Intel, just a touch higher than that. And they could both go to 13 or 14 times earnings. And in Microsoft, you have a yield a little less than 3%. In the case of Intel, you have a yield a little less than 4%. So if the multiples go up 2 or 3 points and you collect the dividend, you get a good return on the stocks.
Jim, thanks so much. Have a great weekend.
Pleasure.
Jim Awad, chairman of Plimsoll Mark Capital.
An incredible story of survival after the world's deadliest garment industry disaster in Bangladesh. After 17 days buried beneath the rubble of a collapsed clothing factory that killed more than 1,000 workers, a woman was discovered alive by evacuation crews. The seamstress appeared to be in good health despite the ordeal and told rescuers that she survived by rationing food and water she found in the basement where she hid after fleeing the falling building more than 2 weeks ago.
Yeah, 2 weeks. That was April 24th. Just think of that. And temperatures apparently were in the 90s. Just
and
an amazing story.
This is now 1,000 individuals killed, worst industrial disaster maybe of all time.
Switching gears here, coming up, Hollywood is making a big bet on a literary classic. But will The Great Gatsby reap great rewards for Warner Brothers? But first, let's take a look at how some of the widely held stocks performed today. A timeless literary classic gets a modern twist as the latest version of The Great Gatsby hits U.S. theaters today. And it doesn't hurt that Leonardo DiCaprio heads up an all-star cast. Buzz about the movie, set in the Roaring '20s, has spawned a pop culture craze over flapper fashions, Art Deco styling, even faux vintage jewelry from Tiffany's. And as Julia Borston tells us, for producers of the film, there's a whole lot riding on the movie itself.
It's like an amusement park.
Warner Brothers is releasing Baz Luhrmann's adaptation of the classic The Great Gatsby this weekend. In a summer crowded with action and superheroes, the iconic novel may not be typical 3D fare, but it's already off to a pretty great start, grossing $3.25 million from midnight screenings. That's more than another hit film targeting female audiences, Sex and the City.
Action!
Warner Brothers is betting an iconic title, expensive production, and a hip soundtrack with Jay-Z and Beyonce will justify the $110 million budget and tens of millions of dollars of additional marketing spend.
Everything about this movie just exudes money. In the way that Great Gatsby did himself in the novel.
And the film has millions of dollars of free promotion from licensing deals with Tiffany, Prada, and Brooks Brothers. But it is a big bet. Warner Brothers doubled down on Gatsby last year when it held off on its release date so it could pour money into reshoots. Now it's betting on a $40 million opening weekend.
It's in a very competitive time frame, but it offers great counter-programming to something like an Iron Man, which will be dominating the multiplex.
Warner Brothers has a particularly busy summer. 6 more films before Labor Day, starting with The Hangover 3 in 2 weeks, then it's Man of Steel, the Superman reboot, followed by big-budget Pacific Rim, horror film The Conjuring, the comedy We're the Millers, and thriller The Getaway. Gatsby's reviews have been mediocre, but that isn't impacting moviegoers. The audience reaction online has been positive. For Nightly Business Report, I'm Julia Borston in Los Angeles.
Still, Gatsby is expected to have a big opening weekend, but it's facing stiff competition from Iron Man 3. Many critics expect it'll be a box office winner.
And finally, history was made today. The final section of Spire was put into place at the top of One World Trade Center in New York City today. Cheers and applause heard from an emotional crowd of construction workers on hand for the final installation. The addition makes New York's newest landmark, which used to be known as the Freedom Tower, the tallest building in the Western Hemisphere. What a beautiful day to do it. It stands now at a symbolic 1,776 feet. I can't wait to see it when I drive home tonight. I look across and I can see the skyline. I look forward to seeing that last edition.
Taken so many years, finally, and it opens for business next year, so there's still a bit of a wait.
It's been a long time coming, but a beautiful building indeed it is.
Well, that's Nightly Business Report for tonight. I'm Susie Garrett. Have a great weekend, everyone, and a happy Mother's Day to all of you out there.
And a happy Mother's Day to you, by
Thanks,
the way.
Tyler.
Have a great weekend.
I hope so.
Hope everybody takes care of you, pampers you.
I like that idea.
Breakfast in bed. Happy Mother's Day, everybody. We'll see you Monday.
Nightly Business Report has been brought to you by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our dividend stock advisor guides and helps generate income during a period of low interest rates. Options Profits helps educate beginning and seasoned options traders. Action Alerts Plus is a charitable trust portfolio that provides trade-by-trade strategies. Online, mobile, social media. We are TheStreet.com.
I'm Susie Garrett with a Nightly Business Report news brief. A stronger U.S. dollar, especially against the Japanese yen, sent commodity prices tumbling. Gold fell $32 an ounce. But the Dow and the S&P 500 closed at fresh all-time highs with help from the solid earnings reports. The Dow rose nearly 36 points. The Nasdaq added 27. The S&P up 7. Washington is forecasting a record corn crop this year as farmers bounce back from the worst drought in decades. The IRS is apologizing for targeting the tax-exempt status of some conservative political groups. Sears will begin leasing kitchen appliances and lawn equipment to customers with credit problems. And the final spire was installed atop the new World Trade Center, making the tower soar a symbolic 1,776 feet above New York City. Be sure to tune in to Nightly Business Report right here on your public television station.